And welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, November the 24th. And happy Thanksgiving Day, Phil.
Yeah, well, it is, isn't it? Oh, thank you. Yeah, I forgot about that.
Actually, talking of turkeys, well, they're sort of big chickens, aren't they, really? Have you got enough eggs at home? There's a bit of an egg shortage, isn't there?
Yeah, I've got 5, just in case anyone wants to buy one.
What, 5 chickens?
No.
5 eggs?
Yeah, of course.
Why have you got 5? They come in half dozens. Anyway, I'll tell you what, there is a sort of a reason why I mentioned eggs and things, because actually we had a request this week of, do we look at agri-tech at all? And actually, I know that this week there's been quite a lot of activity, and I think it's called BSF Enterprise. And people are all sort of getting excited by it. The answer is we don't really do agri-tech. We probably should. One of my favorite people to follow is a guy called Tony Sieber, and he is really into that. And I'd recommend following him if you're into agri-tech. We also, of course, have an asset manager around here at VSA Capital who is basically a mining asset manager, but she's also just started an agri fund as well. And I know that at Schroders they have basically a food and agricultural fund looking at these sort of things as well, run by Felix Odie, which I believe is pretty good. So that I'd recommend having a look at that as well if you're into that sort of space. But unfortunately, I don't think we can help, can we, Phil?
No, well, not at the moment, but I think, as you like to say, you know, it's something we should look at. Maybe have a look at a bit further, and I will do.
Yeah, maybe we will. Now, there's a lot of news. We better not waffle too much. Although I've got to say, you've probably been watching the World Cup, have you, Phil?
No, Andrew. I've got, as you know, the office sweepstake, and I have Wales who drew, and I've just drawn Ecuador as well. So I'm just waiting in anticipation.
I think I'd paid to clean out all the rubbish in the office sweepstake just to keep the kitty topped up. But I'll tell you what I did find one interesting statistic from the World Cup. That is the most expensive World Cup ever by miles. It's cost about $220 billion because, of course, they've had to build everything, all the stadiums and everything. Whereas, of course, had it been in any other country, the stadiums probably would have already been there. But there's an interesting statistic for you that I found. Well, I found it interesting anyway. Now, also, just as a little bit of a preamble, as I say, there's actually quite a lot to talk about. Mustn't preamble too much. But it is, I think, also worth just pointing out at the moment that, and I've been certainly talking to my clients a lot about this, but COVID is breaking out actually pretty badly in China at the moment. 1.3 million close contact cases. And I think something like 25,000 actually reported cases of COVID. Now, normally when you get reported, you add a couple of noughts on to get the real thing. We've seen the Apple iPhone factory. There's on social media videos everywhere where COVID has spread around that and that whole city of I think it's Jingzhou or somewhere. But it is going to become a bit of a problem, if China goes back into lockdown again. We're in the zero COVID situation. It just isn't changing. And I think one has to factor all of that in when looking at markets. Having said that, markets are a lot more stable. I think we're all hoping, aren't we, for a Santa rally towards the end of the year. That would be nice, wouldn't it? And, well, we'll see. The pound is back to 121. All those people who said that it was going to go below parity, like the BBC, they got that completely wrong. We said it would bounce back up. We got it absolutely right. And actually, I noticed that interest rates, that the UK 10-year government gilt, the bond rate has just dropped below 3%, which is pretty promising. So maybe it's not all bad out there. Any thoughts on any of that, Phil?
Well, yeah, I mean, to back that sort of up, I was reading this morning also that the minutes have come out of the Federal Reserve meeting in the States, and they're signalling a slowdown in the pace of interest rate hikes. Potentially, and we're waiting for news out the European Central Bank. I think that's today. And also there was news in the week that German producer prices had posted their first monthly fall in 2.5 years. This was in October. And they're, again, raising hopes that inflation had potentially peaked. So that's, some pretty, it's pretty generally some good news.
Well, as you know, I think I've been predicting in H2 2023 that we will actually have deflation. We've got Brent crude now at 84 as well, which will help that. If we go to deflation, it'll be interesting to see if all the unions that are striking at the moment, trying to get more money, if they will actually then go out and strike, saying, no, you've got to give us less money because we've got deflation. Somehow I don't think they'll be doing that. But there you go. But yeah, I think from a stock market point of view, it's still quite a complicated mishmash out there. But I think one can be a little bit more positive, which is why we get sent to rally. Anyway, let's I think there's a lot of news and stuff out there. And as you know, one of my games is to try and catch you out and see what maybe if I spotted something that you didn't spot, Phil. But why don't you kick off with the news, and I'll see if I can catch you out.
Right, perfect. So Rotork, ticker is ROR, 2.6 billion market cap. So just kick off with a larger cap one. They had a trading update for the 4 months to October end, and you may have come across Rotork in the past, Andrew, but they're a very big manufacturer and developer of valves and actuators and pneumatic systems, instrumentation control. So a big engineering company serving oil and gas, water, chemicals, processing, all sorts of industries. And they were saying, it was really interesting on this, that their revenues for the 4 months grew by 18.6% on an organic constant currency basis. Obviously, currency has its impact right now, and with the strength of the dollar, but nonetheless, they're seeing strong growth there. The combination of volume, also higher pricing, they've been able to put the prices up, and successful supply chain improvement measures. So all in all, I thought that was quite an interesting set of results from Rotork.
I mean, as you say, Rotork's been around forever. Actually, again, it was a bit like last week. We were talking about all these IT companies that have been around ever since I've been in the market, over 40 years, and just basically had stupendous performance, particularly after the sort of noughties, and benefiting, of course, from lower interest rates, which obviously helped. But yeah, I mean, it's another stock that had you bought 40 years ago and just sat on it, you would be feeling pretty happy with yourself, wouldn't you?
Yeah, absolutely. But there's still an opportunity now, so keep track of this one. Because, I thought it was quite interesting. I think they'd also said that a lot of the spend, here we are, activity in the period was driven by customers' operational rather than capital expenditure, continue to spend on automation, electrification, and digitalization of projects. So interesting to see, OPEX as a driver, because that can be quite sensitive as you go through an economic slowing. So good indicator there. Also, did you see Diploma, another company that's been around for a long time? Ticker's DPLM. The market cap is 3.5 billion. And they have their full-year results to the end of September. And Diploma's shares are up by, I was just looking, by 14% in the last 6 months. And they produce controls, wiring systems, seals and gaskets. They've got consumables and instrumentation to life sciences. They provide, they supply the telecommunications markets, EV, energy, renewables, and life sciences. So one of these companies, very, very well established, great longevity across a spread of end markets. So very strong brands in there. And they reported revenues up by 29%, but obviously this is a company that acquires as well. It's a big business, but their organic revenue was up by 15% to, I think, £1 billion, of operating profits of 190 million. But what was interesting here was they were able to maintain their operating margins, and this is in an inflationary environment where you've got costs that are increasing, but they held their margins and generated very strong free cash flow, something we always look at. That was up by 11% to 120 million. So good, nice set of results from Diploma there. And they were saying particularly they'd seen sort of strong aerospace demand and good growth from the renewables sector as well. So that was good to see.
I mean, we'll come on this. Most of them, there were one or two that weren't great this week. Most of them are all pretty good, but actually most of them also, like Diploma, as you said, they start off with a very strong statement, but then at the end of it, they tend to go, our guidance is still consistent with what we said before, or in line with whatever. So we're not actually seeing many upgrades from these companies, and Diploma did end with a sort of consistent with our guidance.
Yeah.
But yeah, they're good. So anyway, keep cracking on because we've got quite a lot to get through.
I think my message would be, Andrew, though, it's pretty good that they're holding their own in, what is an inflationary environment, and we've had supply. That's quite.
Yeah, I agree.
That's quite good. Solid State. So ticker is SOLI. Market cap's 145 million. And this is one that we've often discussed in this podcast. Let's have news. Their shares are up by 8.5% for 12 months. And they've announced a new contract. Now, Solid State is a specialist in electronics. So they not only distribute electronic components, but they also develop, build electronic systems, assemblies. They made an acquisition in the States of a battery pack manufacturer in the US earlier this year. But they've just announced that they've been awarded a further £9.8 million contract by NATO. To supply communications equipment to defence customer through its systems division, and this is a follow-up order for one that was announced, a 7.3 million order in November of 2022 with NATO, and the company had announced in October a trading update for the 6 months ending September, and they're expecting revenues of 59 million versus 39 million. And including that's like for like, which we'll look at, which is organic growth of 30% on a constant currency basis, and profits up as well. So they're progressing very well.
Yeah, and it's one you like, so it's one you've talked quite a lot about. We should get them in actually, Phil, and have a little chat with them.
Okay, I will look into that. Another one quite like, which has been progressing well, is Calnex. Ticker is CLX. The market cap is 135 million pounds. Share price up 19% in the last 12 months. They have interims. And Calnex is its test and measurement solutions for the telecommunications sector. And I used to cover Spirents in this space as well. It's a larger company. But in telecoms, when you're developing equipment, you need to test it all thoroughly to see that it will work on the actual networks themselves. There's a thing called network emulation and synchronization. And so they're providing their telecommunications testing kit to the manufacturers of telecoms equipment, but also for telecoms infrastructure providers as well. And a lot of their, sort of their business is being driven by, hyperscale, so it's data centers, things like 4G and 5G. So where you need lots and lots of data, lots of advanced equipment to run the network. So they had their interims, and just quickly running through those, their sales were up by 38%, 12.7 million. And their profit before tax, which you always like to see, is sort of more or less tracking sales, was up by 34% to £3 million. And they closed with cash of £14.4 million. So it's it's pretty well funded, generating a divvy. And they've said, Andrew, confident that they'll be in line with market expectations. So cracking on. Yeah. That's quite a decent set of results there.
Very good. Come on, find us one that's going to beat expectations. I'm sure you can.
Beat expectations. Okay. Well, there's a couple here. Let's have a quick look through that I've got. So, CML Microsystems, they might do. So CML's it's a smaller one. I've known this company for a long time. The ticker CML, 67 million market cap. They had interims. And they are what's called a fabless semiconductor company. So they design the semis, and they use external wafer fabs to make the semiconductor chips. And they market them internationally. They specialize in chips for wireless communications, particularly 5G, Internet of Things, but satellite comms as well, and aerospace and defense. And they had their was interim results, and the sales were up, revenues were up by 22%, profits were up from 0.5 million to 1.75 million, profit before tax up by 81%, and this company has about 23 million of cash. So I think there's one that has potential. I think this one may have potential for upside. It's exposure to defence, it's network infrastructure spending, satcoms. These are decently. These are markets that are sort of less cyclical in their growth. So I think this one could do quite well. It's well funded.
That's a good one. Well, it's always good to have cash, isn't it? I thought you may have mentioned AO World, who had interims.
Andrew,
Have I done it again?
you caught me out.
Don't worry. It's quite obviously, again, it's quite a good sort of bellwether stock, but it was interesting that they did say that they thought their full years now would be at the top end of guidance. And actually they said in full year 24, profit guidance will be above consensus. So one that's going well. There you go. I just like to catch you out every now and then, Phil. I'll tell you what, I'll give you one which you will have looked at. And that's Johnson Matthey.
I did, but
you did, and you're now thinking, what the hell did they say?
Briefly, Andrew, you've seen it more detail.
Oh, I love it. I love it. I'll tell you what, look, everything was all sort of fine. As you know, Johnson Matthey had been actually undergoing quite a lot of change recently. They were interims. They were all in line. It was fine. So that's all fine. And their outlook was all sort of fine as well. Consensus range, all this sort of stuff. What I thought was interesting, they did say they were in advanced talks to secure a large-scale strategic partnership in hydrogen technologies. This is the way Johnson Matthey are really pushing is hydrogen technologies.
Yeah.
So just be aware of that. And yeah, they had interims this week. It's one we've talked about quite a lot. We've even had them actually on our podcast talking to us. So we do. I actually have a soft spot for Johnson Matthey. And actually, if you look at it, believe it or not, year to date, they're up 2.88%. There aren't many stocks that you can say are actually up year to date. Now, admittedly, that's because they had a pretty bad year last year when they ran into a lot of problems and changed the management, etc. But things ticking along quite nicely there. Right, that was two I caught you out. Back to you, Phil.
Yeah, okay. Well, this is I'm just going to focus on. I've got another small company here which I've not looked at before. It's called Interseed. I don't know if you come across them. The ticker's IGP. It's 33 million market cap, so this is a small one. And they specialise in sort of, they say cybersecurity software, but actually it's more to do with a very advanced digital identity technology. So this is for users and systems. You've got the two-stage password authentication that we get all the time to log in. This is a lot more advanced than that, and they use what's called PKI certificates that are issued on secure devices. Anyway, their tech is such that it's used by global aerospace and defence manufacturers, UK government, US banks. So it's obviously pretty good at what it does. But they had said they had interims to September, and their sales were up by 24% to £6 million. Profit before tax from break even to about 0.6 million. And the net profit was up as well, and the margins, the net margins were up. So it's got 10 million in cash. What's interesting about this is not only is it winning new business, it's got cash, but also looks like it's been going through board changes as well. Something we always look out for, because you can see often get a fresh direction. So they've got a new FD on board and a new chairman on board. So I think this is one that will be I want to keep an eye on.
Yeah, it looks like another one you better get in, Phil. And I mean, talking of seeds, I think, correct me if I'm wrong, did you go to the Superseed Capital Markets Day? Superseed obviously is basically a private equity for seed capital, but we floated a vehicle to reflect their private equity. We did it at a time when it's quite tricky, and so it's still quite a small company. We floated it on Aquis, but it's really, really interesting. Did you go to the capital markets, Phil?
Yeah, I did. Yeah.
And what was your view?
Right. Well, Superseed is they invest in seed companies, seed stage technology companies. So they're quite early stage. They are. I mean, they've got some cracking businesses in their portfolio. I mean, they focus on SaaS-based businesses, so software related, and mainly on the sort of AI, it's business-to-business software. But they look at software products that drive efficiency, productivity, robustness in supply chains. So they've got company supply chain tech. They've got a software company in intrabank trading. There's a software company that does very large scale 3D printing, and it's got customers already in the automotive and aerospace markets. And these are but the early stage. Like the intraday banking software companies already had its software trialed by 13 banks on large scale trial. So these are quite early stage software businesses that are already getting traction with very large companies. And they've got a portfolio of these. So yeah, Superseed, it's quite on Aquis, but well worth looking at, I think, for the quality. It is a corporate client, but they've got some very high quality early stage tech investments that they're involved
It's the only way, isn't it, really? Well,
yeah.
Not the only way, but if you want to get into seed investment, which is really difficult and potentially dangerous, it's a really safe way of doing it. They will actually, of course, be presenting at our Aquis Showcase Day, and Britain's got Aquis competition next Tuesday at the Royal College of Surgeons. If you haven't got your ticket yet, then please do. We've only got about 5 places left. We've got a huge take up for that. It's going to be an incredible day. But talking of sort of, collectives in IT, we also had Molten Ventures update, didn't we? Which is the old Draper Esprit.
Yeah, yes, we did. What to say about that?
Well, I'll quickly say it again, and that is that basically, actually, like anybody else, and we've seen it with IP Group, which is the one that's very well known, should we say, is that they've had a pretty tough time because they've had to mark everything down so much. But what was interesting was that they are now trading at a discount to their NAV of like sort of 45%, coming on 50%, which in my view is just ludicrous. I mean, the market doesn't seem to be in the mood at the moment for changing that. But I think that, Molten Ventures, IP Group, we'll put Superseed Capital in as well because it's our client, actually are all stocks when the market recovers and people start going, actually, no, IT hasn't gone away. We still need it. These are stocks that are going to be really good performers. And actually, for anybody who wants what I described as just an easy way of not having to pick the individual stocks, it's quite difficult. These are great stocks to get involved with. Sorry, I just checked my numbers. Actually, it was a 54% discount. That is crazy. They came out with an NAV of 837p.
Yeah.
So yeah, I mean, the one that we also should just maybe mention, Phil, because there was one that had bad news actually, and that was PodPoint.
Well, go on, Andrew.
I haven't done it again. I think this is 3 times. They did actually come out with a trading statement on Monday, actually, maybe early in the week for you, right? Where they said that actually they were downgrading everything, an EBITDA loss of around £7 million, and the outlook for 2023 wasn't very good. I mean, PodPoint, again, it's unfortunately sort of fallen into this whole group of transitional energy stocks that have had a terrible year. They're down 75% this year. The theory is we need all these transition energy stocks, but a bit like the dot-com boom, everybody got far too excited a couple of years ago, ramped all these stocks up too high, and then they got impatient because it wasn't happening straight away, and so they've all come crashing back down. But what you do know, of course, because we saw it in the dot-com boom, is that yes, some die out, but the good ones actually then go on to be incredibly successful. So yes, it was disappointing that PodPoint warned, but it doesn't mean to say they're down and out. It just means the share price has collapsed. It's a bit of a dot-com boom.
It is a good time to be looking at a lot of these things. And you're right on these funds. I was looking at HG Capital as well, and they've got some really good high quality software companies in there. And the fund, you've got to be remembered that the fund managers, they've got teams working around them. They've got expertise to draw on, external advisors, and they look at these investments very, very carefully. And there's some good quality businesses in there. And you're right, the levels they're getting marked down to now versus the businesses that they have. It's a good time for investors to start, do the research and have a look at these. So opportunities are rare.
Well, you've always got to do your research. You've always got to look for. There'll always be opportunities. There are also things you don't need to do. I mean, finally, from me, Phil, I don't know if you saw this one, but some may remember a few years back we acted briefly for a company called Zap Scooters out of Bangkok, actually, but potentially to raise money in the UK. We tried, but we never could quite keep the faith. It seemed too far out. I see that this week they managed to reverse into a US NASDAQ listed SPAC that valued the whole thing at about $750 million. And it is quite extraordinary. I know one or two investors, or I know one investor in particular, who apparently has now just got a £50 million profit on this. We actually helped him put his money in through a convertible note. I am sitting there thinking, I wish we'd taken our fee, Phil, which was a very small number. Had we taken it in paper, it would be £2.5 million. I mean, well done, Sven. If you're listening, you're probably not. You're too rich to listen now. But it shows that crazy SPAC market is still playing a game out there in transitional energy. Quite extraordinary.
Look, it is, but it's great to talk about, and it's great to be looking at these things. And I think the time to really be looking is at times like this where things are getting so discounted. Yeah. Well, we'll continue to keep investors updated.
The moral of the story is that the transitional energy revolution is still happening. Yes, it just takes time though, but you've got to keep the faith, and sometimes just we're going to have to fight to get through to the finishing line. But once you get there, the upside could be tremendous. Anyway, that's all from me. Anything else from you, Phil?
Well, just as a theme to end on is, I don't know, there were some announcements this week on battery installations in Australia. And this is transitional energy. This is to keep the grid stable. But there were two big projects announced. One was for 900 megawatts, and another one was for 1,200 megawatts of battery storage. Absolutely, this is very large scale investment in renewable infrastructure. In the infrastructure for renewables. So there, investment is happening, and that's what we're always looking at.
Certainly is. On that note, as usual, by the way, do come along to our Aquis Showcase event. There's some good tech companies presenting. We still say got a few places left. That's next Tuesday. It's an all-day event, but with lunch thrown in and drinks in the evening thrown in, all for free. We're doing everything for free. It'll be really exciting. We've got Andy Bruff there as a judge, Judith McKenzie, Jim Armitage from the Sunday Times, Rich Rickey from Pamela Gordon, the man in the hat. You might get some good racing tips. So we've got Sir Robin Saxby coming along to talk about the future of technology. You couldn't get a better person to talk about the future of technology than that. So there was some really interesting stuff. If anybody's got any comments or anything they'd like to talk about next week, then please do give us a tinkle, and we will try to if we follow it. But on that note, thanks, Phil, and I hope everybody's enjoyed it.
Excellent. Well, I look forward to chatting again next week, Andrew.